So we have some good news. The Westpac Melbourne Institute Index of Consumer Sentiment was up by 9.4% in April. It's still only up at 85.8, so it's still well below that 100 level. So consumers are still quite pessimistic, but at least I think we've seen the bottom in the index. And of course, the main reason has been the fact that the Reserve Bank paused on interest rates. So we saw a 12.2% jump in the confidence of people with a mortgage. We saw a 12% jump in the confidence of people in terms of the outlook for their own finances, and a 10% jump in how they feel about their finances relative to a year ago. One disturbing aspect was that even though we had a 9.5% jump in how they see prospects for buying major household items, that is still below the low point that we saw during the deep recession in the early 90s. So prospects for spending still remain constrained. And indeed, at 85.8, we still think that the outlook for consumer spending over this year and the first half of next year is going to be quite lackluster. The best news was around housing. So there was a 16% jump in the Westpac Melbourne Institute House Price Expectations Index. That puts that index now 43% above the low point we saw in this cycle back in November, and only 2% below the level that we saw before the Reserve Bank started raising interest rates. So the response of the Australian consumer to what we've seen with regard to this pause is suggesting that they're becoming much more interested in the idea of investing back in housing. So that'll be something that we'll be watching very closely over the next 6 months or so. Over the last few weeks, we argued very strongly that the Reserve Bank would pause at the April board meeting. We're less convinced that it's likely that the pause will continue in May. There's a lot of data for them to look at, particularly around the inflation story, where they get an accurate measure of it rather than the monthly reports that are quite unreliable in terms of underlying inflation. We've seen today how we're seeing the housing market starting to recover quickly. So we think the best policy will be for the Reserve Bank to do one final rate hike in May. But as we move through between now and the board meeting on the 2nd of May, the data may indeed indicate that they'll be pausing again. But at this stage, we're still looking for a rate hike on the 2nd of May.